I'm using a software called ChartNexus. It can be downloaded from chartnexus.com, and once it is downloaded, you can also set it up to automatically update your data. Go to Start, and over here we have Data Downloader. You have the World Index, BSE and NSE. All these are free of charge and will get updated on a daily basis as long as you're connected to the net. Now let's look at the Nifty chart. This is the CNX Nifty, and as we can see over here, from midway of May, Nifty has gone into a corrective phase. Now over here, what you see at the top of the screen is the OHLC chart, which also stands for open, high, low and close. I have put in the Bollinger Bands, which are the dotted lines above and below. The blue line here is the 20-day moving average. The green line is the 50-day moving average, and the blue line is the 200-day moving average. So I was talking about the downtrend. It peaked around over here and it has gone into a downtrend. Let me draw some line to reinforce that. So this was a very sharp downtrend there. It was broken by a minor uptrend. However, the uptrend didn't continue and you have a close below this. So then the downtrend overall continued. So we could either say it started over here, right there, a downtrend all the way till here, which has now been broken by 3 consistent days of higher closings. There is a gap over here which should be covered in the future. If you look at the prices, you have consecutively higher bottoms, higher lows. The tops also continue to be higher. There is quite a bit of volatility, but on the overall, the market looks on the higher side. The Bollinger Bands also, if you notice, they are widening. It means that we should expect a correction sometime soon. Another positive is that the green line, which is the 20-day moving average, has cut the 20-day moving average from below. And it is going close to cutting the 200-day moving average also. So if it cuts the shorter term moving average, if it cuts the longer term moving average from below, it is a positive development. Furthermore, a beautiful pattern can be seen here. Let me just remove these indicators. I have removed the Bollinger Bands and removed the moving average. Okay, that makes it clearer, and it's very easy to remove these lines as well, which we have drawn. Just select the lines and hit the delete button. Okay, now that is cleared off, I will draw a new set of lines over here. This downtrend from the middle of the chart over here all the way down till this place, and then the continued uptrend. Now if you can see over here, it is not one straight downtrend over here. The downtrend was broken, the price moved up, and then it fell again. And similarly, when the price moved up, it fell before continuing to move up. Now what we can see over here, if I use my drawing tools, let me draw a longish line starting here and connecting these bottoms. Now this one is a longer term uptrend. This is known as the head, and these two are the shoulders, the two sides which I have joined. This is actually an inverted head and shoulder. I'll draw something further interesting. This part is the neckline where the price refused to breach. You can see a similar pattern a little earlier. You have the left shoulder over here and you have the right shoulder over here, and this is the head and this is the neckline. So what this means, this head and shoulder pattern, is that once the shoulder is formed, the head is formed, and then the second shoulder is formed. Once the second shoulder is formed, if the price goes below the neckline, then it will continue to fall. Similarly, in an inverted head and shoulders pattern, you see over here, let me remove this extra line, and the neckline of the previous head and shoulders pattern. In your inverted head and shoulders pattern, the neckline connects the lower of the two shoulders. So once the price crosses the neckline, it will continue to go up. So that is another positive indicator for the market at present. Looking at the other indicators, you have the force index, which is in green, the MACD indicator. The signal is in positive territory. It crossed over into positive territory right at this particular point, which is sometime around the beginning of this month, July. Also, you have the signal, the MACD cutting the signal from below. I use the 14-day RSI, which is the relative strength index, and I keep my indicator at 50%. So my indicator is whenever the RSI crosses the 50-day indicator from below, the 50% indicator, I'm sorry, from below, it is in positive territory. I also use the stochastics indicators, the fast stochastic and the slow stochastic. I have modified this to a 14-day and a 15-day and a 40-day stochastic. Now the 14-day stochastic, once it crosses the 25% mark positively over here, is when it gave a indicator. Similarly, the 40-day crossed the 25% mark also approximately at the same time. This was a week before July, and this was around the first week of July. So all these indicators put together, we can conclude that Nifty is currently on a strong footing. The medium term indicators for Nifty would be 6,120, which was the previous high, and above that the next target would be 6,228.